Goldplat is a profitable South Africa-based gold producer with international gold recovery operations located in South Africa and Ghana. The management have successfully refocused Goldplat on its core metals recovery business, and the business has been steadily profitable for several years now. Goldplat is throwing off sufficient cash to expand into South America on a measured basis and to build a new PGM recovery plant in South Africa itself, probably close to the original base, I think. Werner Klingenberg, the Goldplat CEO, he joins us live from Johannesburg. Welcome, Werner.
Okay, thank you, Donald. I think tonight I would like to give the audience a quick sort of background on Goldplat. We've had a few of these sessions before, and I'll rather try and spend a bit more time in terms of answering questions. Now, Goldplat PLC is an AIM-listed company. We've been listed since 2006. We focus on the recovery of precious metals and gold, as the name indicates, Goldplat, from our operations in South Africa and in Ghana. Our focus is primarily on the recovery of gold and precious metals from byproducts. Just want to move to the slide. From blue chip producers in the industry, the operation started in South Africa. We've later expanded into the Ghana and West Africa. And we're currently planning to extend our operations into South America, specifically Brazil. So if we look at Goldplat, in essence, we are secure material from current producers, as well as assisting current landowners which has properties which has been contaminated by historical mining activities. We assist them in terms of cleaning up surface sources and processing that through our plants. At the same time, obviously, recovering value and returning that to the landowners and the owners of the material on hand. Now, if we look at what the specific material is that we're processing, we focus on byproducts, fine carbons, mill liners, wood chips being produced and exported from current CIL operations at the gold plants in South Africa, as well as in West Africa. We also then look at surface source materials that we process through our various CIL circuits in South Africa. And we've really got a diverse setup, specifically in South Africa and also in Ghana, which includes milling circuits, jigging, gravity, as you can see on the slide. I'm not going to go through everything in detail. In the end, what we produce is gold doré as well as silver doré. We produce gravity concentrates through our gravity concentrate circuits, as well as other concentrates that we deliver to smelters for further processing. Now, if we look at our current numbers, it's always nice talking while the gold price is going up, as well as the share price. And we're going to talk a bit about the profitability and the increases we've seen over the last 3 quarters. The share price is currently at 8.5p this morning. As you can see on the graph, we've been moving up from levels between 7 and 8 over the last 2 months. This has primarily been supported with us starting to distribute money to shareholders through share buybacks. We've bought back roughly 400,000 pounds of shares during the last 2 months, which is the first time we started distributing in probably the last 10 years, which has been the indication to the market over the last 3 years, which is our intention. Our market cap has increased to 14.41 million. We still believe that's probably quite below intrinsic value, and I'll provide you a bit more detail as why we are saying that shortly. If we look at our shareholding, we currently have a major shareholder in Martin Oy, an individual who owns close to 29%. Now, when I started, I specifically spoke about Goldplat and the fact that we've gone through some changes over the last 3 years. In essence, Goldplat was listed as a recovery operation, the one I've explained to you just now in 2006, with the aim of using the working capital generated from these recovery businesses to build a junior mine in Africa. Now, for various reasons that I'm not going to explain, we've decided to exit that strategy in 2019 and focus primarily on the recovery operations, which has been historically profitable, which has been our niche and our strength. And in the slides, I tried to sort of extract just the operational numbers of the 2 recovery operations, South Africa and Ghana, consolidated for you. This excludes, obviously, the finance and interest costs or foreign exchange costs, as well as the listing costs. But it's clearly, you can clearly see that over the last 5 years, on an operating level, we have been generating around an average of £4 million out of these 2 operations during the last 6 months up until December, that we produced that in the last 6 months. If we look at our operating numbers at the end of the 3rd quarter, we've actually produced operating results for the 2 entities of close to £6 million. So if we go and now strip out the legacy mining operations, which we've impaired and we have taken out of our accounts in 2020 already, it is clear that we are looking at a business which has been profitable not just for the last few years, but actually has been profitable for the last 10 plus. I went and, I don't have the figures here, but I went and actually this morning just had a look. For the last 10 years on a net profit level, the 2 recovery operations generated net profits of 30 million after tax and interest, and only incurred capital of less than 10 million, which just indicates to you the strength and diversity that lies in the recovery operations, as well as the area we are servicing. I've just indicated that we had quite strong results for the 9 months. You'll see out of South Africa, we've produced 3.5 million operating profit for the 9 months. And in Ghana, we're also seeing good results, not just in this 9 months, but actually the 9 or the 12 months before that as well. And we've generated 2.5 million on operating level there, giving you the 6 million number that I referred to just now. If we jump ahead and we just look quickly at the financials for the prior year, 30 June 2021, as well as 31 December 2021, which is obviously unaudited, we can see that we actually have quite a low multiple. If we look at our price earnings ratio, our basic earnings per share for the first 6 months was around 1.2 against a share price currently of around 8. In the previous year, for the full year, that was basically what it was, also around 1.2. And that gives you multiples currently around between 3 and 4. If we take that in combination with our balance sheet strength, you can obviously see why we still believe that there's a lot of value in this company. And I'm going to talk about a bit more about what does that mean for us going forward, and what does that mean for the shareholders going forward specifically. If we look at our net current asset position, we can see that current assets at 29 million, current liabilities at 20. We've got roughly 9 million pounds locked up in working capital. And that is against only a 3 million pound overdraft, which relates to a share buyback that we've done in the beginning of this financial period. In South Africa, we procured roughly 16% of the most profitable subsidiary in the group over the last 10 years. And that we've done basically because our minority shareholder was looking to exit. We saw the value. We also still had a lot of money payable to Goldplat Recovery, the subsidiary which we procured the 16% from. And for that reason, it made sense for us to invest further into the operation. And we can already see that value coming through to shareholders as well. Now, if we look at the net working capital position, obviously that is quite high if we consider the operating levels. And that is really for a number of reasons. I mean, the one is because we are doing extremely well at the moment and we see increased activity. You are seeing, together with that, a lockup in working capital. The other reason is that we are obviously entering and being aggressive in terms of new markets, meaning we need to pay certain monies up front for material we procure to process. And then we're also experiencing at the moment some sort of delay on exporting some of the material to smelters as a result of the normal supply chain situation that everybody is facing in the world at the moment. We are also, we tend to have a longer lead item in terms of the material we process, which can be around 120 to 160 days to turn around. The encouraging thing is that as all of this is part of normal business, we can see this value coming through in the future. And I'm going to talk a bit more in terms of how we see also ways of limiting the amount we're going to invest in working capital. And with that additional cash being generated or turned around from working capital, we'll be in a good position to continue to evaluate either to distribute to shareholders or for any other potential projects that might come around. So if we now just stand still for a second and then consider where Goldplat PLC is at this point in time. We've exited the mining industry, which has been sort of a legacy drag down for the group. We have been profitable. We've been generating cash. We started to distribute money back to shareholders. And I think for a lot of shareholders out there, the question is, well, what are we going to do with this current good set of results and this good base we've generated? Now, if we look at, if we start and we look at South Africa specifically, we have really three sort of revenue drivers. The one is current mining operations where we secure byproducts from. The other one is raw materials, which we normally procure from landowners whose properties been contaminated by historical mining over the last 150 years. And the third one is obviously the PGM market. Now, on the byproduct side, we've got quite a good and strong client base. In South Africa, there is basically two major producers at this moment. We have one of these on contract, and we've got most of the other smaller ones. We do, however, still have the opportunity to grow and to diversify by securing material from the other large producer, which is the major aim, but also obviously is an indication that on the byproduct side in South Africa, there is still scope to grow this side of the business. If we then go and look at the raw material business, at the moment we have invested over £2 million in raw material, which is basically 2 years or 24 months plus minus of supply for the CIL circuit. Now, there we are looking at key strategic partners to try and find ways of securing large volume of material. Let's say another 3 to 4 years, taking the material on hand to over 5 years. But the plan there is to do it without necessarily needing the working capital outlay, where we secure that material where it is on that site or on that premises, and we don't need to go and truck it to our premises, incur all the transport cost and the acquisition cost as a start. And that's something that we're really focusing hard on in terms of securing and sort of just being able to give the market a view on the CIL side or the raw material processing side of a bit more of a longer scope. Then on the PGM or the precious metal side, this is actually quite sort of encouraging. It's something we've been doing for a long time, although it's not been too a big part of our margin. However, we have been able to secure more and more material to an extent that it warranted us to invest into a small flotation plant at our premises in Benoni in South Africa. And with that investment, it will actually now give us the ability to be a bit more aggressive in terms of going into the PGM industry and identifying smaller resources that contains PGMs and that needs processing in one way or another. And we believe that our current facility, together with the flotation plant, which we've constructed and we're busy commissioning, we will then be in a position to actually grow that side of the business quite aggressively. Then if we look further in South Africa, the actual big potential still lies in our tailings facility. We've got plus minus 2 million tons that has been deposited from the processing of material. As I've described earlier, the various type of materials that we've processed has been deposited on a tailings facility. It's containing roughly 2 million tons at the moment. When we did a JORC compliant resource on it in 2016, I think the tonnage at that point in time was 1.6 million. And at that point, it contained roughly 82,000 ounces of gold. Now, the plan is to process that facility again. The current grade is roughly 1.7 grams a ton. And we're looking at processing this through a third-party facility. Now, what is important to understand is for us to get to that point, we are going to need three different things addressed. The first one is we're going to need to have a new tailings facility in place. Adjacent to the current facility, we have applied for a license to the Department of Minerals Resources, as well as the Department of Water and Sanitation. And the current indication is that there has been acceptance of that licensing request. However, we're still waiting for the final license to be issued, after which we can then construct and start the positioning on a new site. Once we start depositing on a new site, we'll then have the ability to actually process the old facility. Until we haven't moved off it, obviously we won't have the ability to actually start processing that facility. Now, to process that facility, secondly, what we're going to require is we're going to require to have a pipeline installed to a third party that's in the vicinity where we currently are. We have applied for a license for that pipeline as well. Luckily, a lot of the area where we want to install the pipeline has been under servitude, and there has been pipelines before. and we quite, what's the right word? We're quite positive that that we should be able to actually get all the licensing in place by the end of the year, after which we can then look in terms of installing that pipeline. And then the third thing is obviously finalizing commercials in terms of processing that material through the third party, as I've indicated. Now, we have come a long way in terms of where we were a few years ago, and we're definitely on the right route in terms of finding a way of actually then extracting the value from this facility. Now, we are aiming to utilize a third-party facility for two reasons. The one is it will give us the ability to process material at a quicker rate through a bigger facility, which will be beneficial from a cost per ton basis processed. And secondly, it will or should be able to give us then additional area to deposit the material that's being processed, which will also be required. So if we look at South Africa from a recovery point of view, I still believe there's a lot of scope in terms of diversifying and growing the business and adding revenue streams to the business. And if we then look at the Ghana operation, I think we have done extremely well since we moved away from mining. We focused management attention on the recovery operations. Probably Ghana has benefited the most from this. We've seen a lot of material being secured. We have secured material in Mali, which was quite encouraging. But even with the good results out of Ghana, the reality is there's still clients in Ghana that we still need to secure. We still haven't opened up Ivory Coast and all the potential sites there. We haven't opened up Burkina Faso. There's still a lot of plants that we need to get contracts with in Mali. And then I haven't even spoken about Guinea, Mauritania, and a lot of the others. So from that perspective, Ghana still has the ability to grow, still has the ability to diversify in terms of increasing the amount of clients. And apart from just growing our byproducts base in Ghana, we are still looking at finding ways with through which we can potentially partner or engage with government to assist them in terms of the cleanup and processing of artisanal tails, which remains a problem, I guess, all over West Africa, where there is a lot of artisanal operations and areas that is being left behind that needs to be rehabilitated. And that is something we continually invest or spend time on to see if there's ways we can enter that market again. We've done it quite successfully in 2012, 2013, after we've stopped for specific reasons at that point in time.
One more minute, if you could wrap up now, please.
That's 100%. Thanks, Donald. I think that then the last one is obviously our expansion into South America. We're doing that on sort of a measured basis. We're looking at securing a property in Brazil, and we will then expand on that property based on the material we identify and the plant we require. Lastly, we're obviously going to look at trying to extract more value out of the working capital and the cash lockup that I've already indicated, as well as then looking at how we are going to handle the investment we still have in Caracal. We still have 5.57% of interest in Caracal Gold, as well as $1.5 million US of royalties that should flow through within the next couple of years. And we're going to need to look at ways we can actually extract the value from that. Obviously, that investment came from the sale of Kilimapesa when we moved away from the mining strategy in Kenya.
Very good. You mentioned, you touched upon the share buyback situation.
Yes.
Whereabouts, have you actually finished the share buybacks?
Yes, Donald. We procured or bought back £400,000. I would say we've completed the initial share buyback. Obviously, distribution to shareholders remains important for us. I mean, I've explained the nature of our business. We're really a servicing industry. We procure material, we process the material, we generate cash flow. And I believe the surplus cash flow needs to go back to the shareholders in one way or another. So
did you regard the share buyback process as a success, and would you consider doing it again?
Yes, I mean, well, I guess the reason why you're doing it is to get value back to shareholders. One way of doing that is obviously with the increase in share price. We've seen some sort of a re-rating in that. But until we haven't seen the share price reaching the intrinsic value we believe it should be, obviously there's reason to continue share buybacks, and also reason to say, well, we probably didn't achieve what we thought we're going to achieve. We were expected to see obviously a bit more adjustment upwards on the share price.
You thought it would give the share price a bit more of a boost?
Yes, exactly.
Okay. I've got a gentleman here who's asking about it's in the same line of Michael Fenton. When do you envisage paying a dividend? I mean, it sort of does fit into the share buyback program thing. So it's
yes.
When might you consider paying a dividend? That's another use of
yes. I mean,
funds.
the reality is,
perhaps a more obvious way of getting money back to shareholders.
Well, I mean, Donald, as we've indicated to the market, we want to distribute value back to them. We've started that in doing a share buyback. I can't say that we will not look at dividends. I mean, as long as the board, however, believes that we are trading significantly below intrinsic value, there will be reasons and support to continue doing share buybacks rather than dividends. Okay. There's obviously more than just that to evaluate at the end of the day. And I'm sure for each investor, whether it's a share buyback or dividend, some investors might benefit more from a dividend. We, however, felt initially that the share buyback was the right option, but we will evaluate it every time we want to distribute value to shareholders. And I mean, currently we've got a lot of value in working capital. I've explained what is happening on the supply chain side. So once we see some sort of a release, we're generating some cash again on the back of the profits I've mentioned. Yes, we are going to need to look at distributing again.
Okay. So just for clarity, I think you had almost £6 million worth of profit in the last year. Is that correct? Almost 6 million?
Well, yes, Donald. I mean, I guess I need to qualify that.
Is that gross or net?
When we do the quarterly updates, we provide operating numbers. So that's before interest, foreign exchange movements and tax, and also before listing costs. However, if we look at the numbers achieved for the two operations on the operating level for the first 9 months, it's already in line with what we achieved in the 12 months prior. So yes, that gives you some sort of an indication of where the group and the cash flow generation is, yes.
How much of that, I suppose what I'm getting at ultimately, is what percentage of that is available to spend on projects? By projects, I mean the PGM recycling plant, the tailings, South America, Brazil.
Well, Donald, I think, that's the beauty of our business. I think to an extent we've been capitalized, I won't say fully, but significantly so. I mean, we need about we indicated around £300,000 for investment into South America, and we'll grow that slowly based on what the requirements is in the future.
And how is that progressing? Have you found a plant that you want to that suits your requirements in Brazil?
Well, I mean, the thing is Donald, obviously when you enter a new jurisdiction, you need to make sure you do it properly and right. Finding a property is one thing, obviously getting it properly licensed and making sure you start the process on the right foot is even more important. And I think that has been taking a little bit longer than what we've expected initially.
But on the other hand, it is a foreign country, it is Brazil. Perhaps this may be more normal than you think.
Yes, no, I think so. And I mean, from that perspective, for me, I'm quite comfortable in the development in South America. As indicated, we're not going to invest a lot of money. It's £300,000. But I believe there's a lot of value we can extract from that investment in future and leverage on it. In reality, we want to start targeting the lower grade material. And by securing that, it will then open up the markets on the higher grade material, which the ultimate aim is also to secure. So it's not just about...
In a sense, that is more for the future. Much more today is the PGM recycling plant.
Yes.
Just at a very basic level, for those folks who don't know what PGM is, could you explain what PGM is and what your filtration tank is going to do, and what's the time frame for it all to be up and running?
Well, I mean, the precious metals, I mean, the first thing that we need to note is that South Africa is probably the biggest producer of PGMs in the world. So it just makes 100% sense for us to enter into that market. We have been involved in it from the start. It's basically platinum, palladium, rhodium, and all the other metals associated with that. And the aim would be to look at securing similar type of material we've seen in the gold industry, wood chips, for example, and also other contaminated effluent dams, etc., to see if we can extract additional PGMs for industry, to return value to them, to obviously do the environmental cleanup, which I haven't spoken too much about tonight, which is obviously an important focus for us to assist the industry at large in terms of reducing their footprint on the environment, and then extracting the value through our various circuits. So the flotation plant we added is just one part of it in reality. But yeah, flotation is just a process by which you upgrade the PGMs contained into a lower mass, and that will give you a product where you can actually extract the PGM profitably from.
Are you in a position where you can actually put the foot to the pedal and do larger volumes of PGMs now?
Yes, I mean, I think the advantage is once you've got the circuit, you'll be a lot more flexible and can be a bit more aggressive in terms of going into the market and securing material. Where in the past, we realized that certain material we can procure, but it's going to mean investment in terms of cash, but you're not going to see the value coming out in the near term. You've got the ability to test that material quicker, understand sort of the margins, and then be able to do proper agreements where required.
Where do you see Goldplat in a couple of years' time? You're doing lots of good things, and you've got lots of different projects being planned. Pull that all together for us and say, so you're the boss. What's your vision in 2 years' time?
Well, Donald, I mean, for me is that, I mean, we've been part of the industry for more than 30 years, if you go back even before listing. And I think we have been adding a lot of value to industry. It's about fixing those relationships even stronger in terms of contracts, to be able to indicate to the shareholders and give them a certainty in terms of long-term supply. I believe that our strength remains in the ability to actually extract value from smaller resources, because we have low overheads. We try and manage our capital as low as possible. And through that, I think there's a lot of opportunities we can extract in the gold and the PGM industry. And that would give us a solid base to really build on and grow from. I believe there's a lot we can do in the group. Not just in terms of increasing the share price and the business as large, but in reality also in terms of assisting industry in terms of cleaning up and sort of formalizing that. Because in the end, you also have a lot of industries and mining operations that's coming to end of life, and I believe we will play a big role in terms of formalizing that downturn and extracting value.
Final question to Werner: what might the news flow look like in the coming months? Why should we hold the stock?
Well, Donald, I mean, I've tried to highlight towards the end exactly what I believe where the value is going to come from. So it's going to be on strategic partnerships. It's going to be on development around the TSF. It's going to be on results from the flotation plant. It's going to be growth of resources and client bases in West Africa. That's probably going to be the key in supporting us and the share price going forward.
Werner Klingenberg, CEO at Goldplat, thanks you very, very much for joining us from Johannesburg, or Pretoria, which I'm told is all part of the urban conurbation, which is Johannesburg these days. Thank you so much, Werner, for your time. That was fantastic. I really enjoyed that. Very interesting, and it's great to see how you've got on top of that business and really made it sing. Take a bow, Werner. Well done.
Thank you, Donald. Appreciate and thank you for the audience.